Welcome to this week's Zehnlabs performance update for the week ending October 10, 2025. This week, the market experienced some volatility, with the S&P 500 ETF SPY finishing down 2.42% for the week. Let's take a look at how our tactical asset allocation strategies performed during this challenging period. First, the disclaimer. This video is for informational purposes only, and should not be considered investment advice. Past performance does not guarantee future results. All investments carry risk of loss. Performance numbers may be hypothetical or based on historical data. You must agree to the terms of service at the link shown on the screen. If you continue to watch, it will be assumed that you do. Starting with ETF Blend 120, this strategy posted a return of negative 1.03% for the week, significantly outperforming the benchmark by more than 1.3 percentage points. While the week saw some downward pressure, this strategy demonstrated excellent risk management. Looking at the bigger picture, the strategy is up 20.77% year-to-date, compared to SPY's 12.4%, and has delivered an impressive 45.58% over the past year against the benchmark's 14.52%. Over the past decade, this strategy has achieved an annualized return of 47.02%, absolutely crushing the benchmark's 14.39%. Next up, ETF Blend 10115 finished the week down 0.44%, once again outperforming SPY by nearly 2 percentage points. This conservative strategy continues to demonstrate its strength in managing downside risk. Year-to-date, it's up a solid 25.46%, well ahead of the benchmark's 12.4%. Over the past year, subscribers have enjoyed returns of 28.51%, nearly double the benchmark's performance. The 10-year annualized return stands at an exceptional 26.65%, showcasing the power of consistent, disciplined tactical allocation. Moving on to ETF Blend 10225, this strategy saw a minor pullback of 0.84% for the week, but still managed to outperform the benchmark by 1.6 percentage points. The strategy's year-to-date performance of 19.03% continues to exceed SPY's 12.4%, and over the past year it has delivered 36.15% compared to the benchmark's 14.52%. Looking at the 10-year horizon, this strategy has posted an outstanding annualized return of 60.13%, demonstrating the remarkable compounding power of tactical asset allocation. Now for ETF Blend 235, which finished the week down 0.62%, outperforming the benchmark by 1.8 percentage points. This strategy continues to show strong performance across all time horizons. Year-to-date returns stand at 27.78% versus SPY's 15.52%. The one-year return of 40.7% is comfortably more than the double of benchmark's 18.52%. The 10-year annualized return of 40.29% speaks to the strategy's consistent ability to capture upside while managing risk. ETF Blend 340 had an exceptional week, posting a gain of 1.18% while the market was down 2.42%. This represents a remarkable 3.6 percentage point outperformance, demonstrating the strategy's ability to thrive in volatile conditions. Year-to-date, the strategy is up 25.28% compared to SPY's 12.4%, and over the past year it has delivered 34.76% against the benchmark's 14.52%. The 10-year annualized return of 79.64% is truly outstanding, reflecting the strategy's aggressive yet disciplined approach to tactical allocation. Finally, ETF Blend 30120 also had a stellar week, gaining 2.77% while the broader market declined. This 5.2 percentage point outperformance highlights the strategy's sophisticated risk management capabilities. Year-to-date, the strategy is up 7.68%, and over the past year it has delivered 18.36%, compared to the benchmark's 14.52%. The 10-year annualized return of 96.91% is exceptional, demonstrating the strategy's ability to generate substantial long-term wealth for subscribers. This week showcased exactly what our tactical asset allocation strategies are designed to do. While the broad market experienced a challenging week, down 2.42%, all 6 of our strategies outperformed the benchmark, with several even posting positive returns. This is the power of active risk management and tactical positioning. These strategies don't just follow the market. They aim to adapt to changing conditions in order to protect capital and capture opportunities when they arise. As always, we encourage our subscribers to maintain a long-term perspective. Short-term volatility is a normal part of investing. What matters most is consistent performance over time. If you know friends or family who could benefit from these strategies, please direct them to zenlabs.com/fintech to learn more about how they can participate. Thank you for your continued trust in Zehnlabs. We'll see you again next week with another performance update.